Nvidia CEO Jensen Huang telling analysts that production for the company's highly anticipated Blackwell chip is, quote, in full steam, but demand still outpaces supply.
The supply chain team is doing an incredible job working with our supply partners to increase Blackwell, and we're going to continue to work hard to increase Blackwell through next year. It is the case that demand exceeds our supply, and that's expected as we're in the beginnings of this generative AI revolution, as we all know.
Joining us now, we want to bring in Ben Beharin. He is a Creative Strategy CEO and Principal Analyst. Ben, it's great to have you. I know you own Nvidia through some of your mutual funds. I'm curious how you're looking at the results that we got last night, some of that commentary about the relentless demand, it sounds like, here for Nvidia's chips, and maybe what that signals in terms of an investment opportunity.
Yeah, I mean, I think the big thing is they're going to be up against a lot of supply constraints, just because we are working with an advanced manufacturing process for Blackwell, and from that regard, right, TSMC is scaling a new process in terms of advanced packaging. So as that ramps, I think some of those supply constraints will start to ease. But the bottom line is, just from the demand we see from the hyperscalers, we talk to a lot of people in cloud. We talk to a lot of CIOs and CTOs investing in these enterprise AI workflows. We're confident there's going to be a continued demand cycle here for at least the next year, if not into calendar 26. And I would expect that NVIDIA remains just supply constrained throughout that time, if not longer.
Do you expect the spends or the purchase orders that they're receiving from their customers to remain at the same level? And I guess I ask that because we're seeing this demand really show up in even some of the larger kind of S&P 500 targets that we're seeing from banks and investment firms as well, who are talking about the level of spend that AI is expected to receive over these next several quarters.
Yeah, I think the big thing there, and this is just reflected in the hyperscalers' CapEx increase in their spend, is when you just look at the demand today for AI, this is a large amount of organizations just piloting and doing projects. So this is not being deployed yet to every person in their enterprise, nor is this being deployed to every person on the planet with a computer who are using these functions on a regular basis. So that's why you look at this and say we are in the very, very early stages of a transformational moment in computing, and the vast majority of data centers are not AI factories, as Jensen likes to say. We are in the midst of an early transition from general purpose servers, which things that just run the internet, Walmart.com, Amazon.com, Netflix, et cetera, to these AI servers. And that's single digit penetration in terms of the general data center now. So we have a long ramp of spend as they start to transition those data centers from general purpose servers to AI servers. And NVIDIA is going to be one of the main beneficiaries of that over that timeline. And that is a 2-3 year arc if you just look at where CapEx is today.
Ben, how are you looking at valuation? Obviously, valuation concerns we have seen creeping into the market. Do you then think it sounds like maybe the valuation is justified given that opportunity that lies ahead?
Yeah, I think it just goes back to the point as to what happens when enterprises and really every service company starts deploying this at scale, because it's not today. And once we start seeing this move into full deployment, which if you read a lot of commentary from CIOs and CTOs in terms of their spend with their budgets, that's going to be mid to end of next year that they expect to start rolling out those broader AI projects at scale. And that's not even to their entire enterprise. That's to Salesforce. That's to marketing, that's to engineering for coding. Once this really fully moves out to really every knowledge worker, if you will, and really beyond, like the scale for that is going to be significant. And so I think we'll start to see those ROI justifications, those spends start to move to software on that timeline, again, mid to late next year. But we're in still this just build infrastructure stage here. And it's still going to be a multi-year cycle of infrastructure build.
And with that multi-year cycle of infrastructure, are we focusing specifically on data centers, or is there something else that needs to be factored into that infrastructure, such as energy powering those data centers? We've even heard Oracle and some of the other major tech companies talk about nuclear reactors and investing there to make sure that these data centers that have thousands, tens of thousands of chips in them could eventually see, maybe 1 million chips, and that would require much more power.
Yeah, so the biggest trends here, right, is all of this does consume more power. So they are working on obviously bringing in more power. This also requires a new way to cool. So you're hearing a lot about liquid cooling coming into all of these different parts of the data center. That's not something they had to do before. So they're having to add piping, and they're having to add a whole new slew of electricity, ways to deal with that water. So we're in a redesign, if you will, rethink of the architecture of data centers, and that's causing a ton of different implications throughout the entire supply chain, right? People who build racks, all forms of infrastructure for those buildings, and they're getting bigger. They are expanding the sizes of their data center with some of these new builds. So it's really a fascinating time because the infrastructure change that's needed here is so significant, and I think that's why you're seeing so many projects and so much initial spotlight on just how expensive of a problem this is. But everybody believes it will pay off. But like I said, that's why this is a multi-year transformational cycle in infrastructure.
Ben Beharin, who is the Creative Strategies CEO and Principal Analyst. Thanks so much for taking the time.
Yeah, anytime. Thanks for having me.